Hey, there we are. Welcome, everybody. This is Dave Klein back here live in Mumford Hall.
Are you going, Jim?
Oh, no, I'm live in Mumford Hall. Thanks. All right, back here live at Mumford Hall, finishing up the 2020 Land Values and Lease Trends Conference. We thank you all for staying tuned in and staying with us. Those of you that are appraisers, Carol Mary wants me to remind you that if you want the continuing education credit for the state of Illinois, you need to email him your license number by the end of the day on Monday, March 23rd. Please do not forget to do that before we finish. Just need to remind you of that. Dr. Gary Schnicke is here with me now, and he's the man behind the wheels, turning everything here at the U of I College of ACES when it comes to all the different aspects of farm management and extension in production agriculture, answering questions before we've even thought of them usually. And so we thank him for his help with these surveys and putting things together for us here. Also want to thank Jim Baltz again. The slides you're going to see are 10 times better than the ones I gave him yesterday. So he spent, I think, all night repairing and replacing and making things look better than what they were before. So certainly want to thank Jim for his help here at the University of Illinois. But back to Gary, he's obviously a farm doc contributor, a heavy part of that, and is teaching undergraduate and graduate classes here, as well as serving on our executive committee for the Illinois Society of Professional Farm Managers and Rural Appraisers, and we cannot thank him enough for that service. So without further ado, we will get to the final portions of today's presentations, and that is the Illinois Land Values and Lease Trends in Volatile Times. As our press release said, in uncertain times, farmland has been a stable asset. And as Bruce just concluded and talked about, we think it will be continue to be in the future as well. This is our 25th annual report, and you're going to get a color copy if you signed up for the webinar ahead of time. If you need to get one, please get a hold of Carol, and he will be glad to send one to you after you are charged for it. And he has the details on those if you make contact with him. On our last slide will be his phone number, and you can give him a call or look on the ispfmra.org website for those details. But you can get your own copy of the report put together by our team of over 80 professionals and the two professors sitting on both sides of me here today. Just a great job with them and their crews, folks in the Illinois Society, RLI, and some state certified appraisers that work with us also in this whole process. These are the contributing organizations, as I just said, RLI and Illinois and the Illinois Society of Professional Farm Managers and Rural Appraisers. Just three great organizations of people coming together to get information to everyone as we go through. The 2020 booklet has got the 10 regions like we've had in the past. All our sponsors are in there as well. Please view those as you see those multiple ads. Those people help pay for this whole thing to go out at a somewhat supplemented rate so that you don't have to pay what it actually costs to do all this. So thank you very much to those sponsors that contribute every year to the project. As I said, Dr. Gary Schnicke and Dr. Bruce Sherrick are the two gentlemen that coordinate everything here and putting things together so that we have a nice final product to present to you. This group of people is the leadership team. That includes Todd Slock and Bruce Huber, who help with the data collection groups and coordinating all of the things that go on there. Jonathan Norvell here at the University of Illinois also just does immense work in following up with people on advertising and getting all those ads placed and put together so that we can have things brought to you, as I said earlier. The Land Values Conference co-chairs are Reed Thompson and Luke Worrell. We want to thank them for their help in putting this day together. As far as data collection goes, our chairman in this group is Doug Deininger up in the Northeast region of the state, with a special shout out to Nicole Schaefer at Compeer, who helped put together the narrative for Region 1 this year. Faith Stoner and Deanne Phillips in Northwestern Illinois, John Leeser in Region 3, Ross Perkins in Region 4, Brian Weibel in this area of Eastern Illinois, Seth Baker, our next president of the Illinois Society of Farm Managers and Rural Appraisers, takes care of the middle of the state and puts that together. Luke Worrell, as I mentioned earlier, he also is the data collection chairman for Region 7. Dale Kellerman in the southeastern, that Metro East region around the east side of St. Louis. Kent Reed with the Farm Credit takes care of that east central, south central portion of Illinois. And then Phil Eberly continues to help us out in the southern part of Illinois, where there's just not a ton of people to call on. And Phil has been gracious enough to continue to do this even through his maturation through the Southern Illinois University system. So thank you, Phil, for doing that for us again for another year. The land values and lease trends are based upon productivity indexes. As you can see, we often talk about those green spaces being where maybe some of the primest ground is at, but there's certainly areas that are excellent in other parts of the state as well. And that is how we track things from excellent, good, average, fair, with different soil productivity classes. Then the recreational tracts are mostly non-tillable tracts that we keep track of. And then transitional land that may be near metropolitan areas that is being converted from farmland into another use. And so where we try to keep track of that where we can. Sometimes that's difficult to do, but we do that as well. Our results today are dished out to you in 3 different ways, and we're going to talk about that. And that's an emphasis actually this year because of the way the results came in. So our committee estimates, committees put together data using their knowledge and expertise. They try to select what are representative sales for their region, put that information together. That's what goes to Dr. Sherrick. Then he compiles. So the county has an estimate, or committee estimates are put together by the committee on what they think is happening in their area. Then Dr. Sherrick takes the data and crunches all that and gets us actual reported data for the tables that he puts together for each region. Then finally, the third way we look at it also is we ask our memberships of the Illinois Society of Professional Farm Managers and Rural Appraisers and the Realtors Land Institute members, what is happening? What are you seeing as a broad-based answer to the question on different topics? That takes place in February, which sometimes may have some influence on perspective at that point in time as they reflect back on the previous year. So keep that in mind as you look at survey versus committee estimates, which take place typically first couple weeks of January, and then the actual data, which is what Dr. Sherrick puts together. That's provided to him. Once again, data is only as good as what he gets. So we try to do a good job of getting him what we can, but that is the reflection of that. So 2019, from our data collection group's opinions, that's the committees, their thought processes averaged out to around 10.7 an acre across the state on excellent ground. That's a steady number as compared to a year ago. The good category at 84.90 an acre, which is slightly higher. And we'll see that kind of carry through as you look through the other groups as well. Average 65.50 roughly, which is slightly lower. Fair 48.38, which is a little bit lower. And then recreational 38.27, which is slightly higher. This is typically reflective of the general economy, and by year end, the recreational land tends to flow in a similar pattern to the general economy. And so to see it saying slightly higher is not a surprise. Here's the way it breaks out when we look at median values in the different regions and how they compare their price changes, which averages can be dangerous, as I always say, but it does give us a snapshot for comparison. So as we go through the actual data showed that excellent land was down a little bit, but good farmland was up a little bit. I think as you kind of start to blend things together, that kind of tells you maybe a 1% type, number, so to speak, maybe down 1% overall. And then you see that carry through on the average, but then the fair drops off, and that would be the lower quality ground. Not typically surprising to us that lower quality land would be less attractive as people start to kick tires a little more on what they're willing to purchase. The recreational land up 6%. The transitional number is kind of a skewed number because we had so few transactions in 2018. We actually did have more transactions to work with for data in 2019. So from that standpoint, we actually had a little bit more to work with, which may have been a little more of an accurate number than the previous year. Here's a chart that Dr. Sherrick puts together, and as he alluded to earlier, we've got some positivity in certain areas, maybe a little lower in others. But as I take my cursor over to, Dr. Sherrick was talking about the stock market being at roughly 2016 year end. Was that right? That's about where we're at. And kind of look where farmland values would say we're at. Boy, that's a pretty similar to maybe just slightly down one or so number over the 2-year period. But we got the 2% income, the 3% income that would come off of that as well. So obviously, comparatively speaking, farmland still looks relatively good, even though maybe if we'd used a December 31st period, we wouldn't have looked as good. But that's neither here nor there. I think something to look at, though, for today is, where are we at today versus if you backed off to the stock market as where was it at that point in time, and very comparative. So here's the results from our member survey. This is the portion that Gary typically does, and you can see that our sentiment is basically excellent farmland is holding pat, good farmland maybe down just a little bit, average and fair maybe down just a little bit more. That makes sense based upon what our membership thinks is happening out there, and that would not be a surprise to me either. Farmland rental rate trends are staying fairly steady. I think we have MFP to thank for that, and something we don't want to forget about as we move forward. Back to the data. This is some of Bruce's number crunching here, and you can see how those numbers come out over the long haul. Farmland is still a relatively strong investment, even though our numbers in 1 year may not be all that spectacular. The average price per soil productivity index stayed basically level, and that gives us an idea of a way of kind of indexing what is being sold. That influences the productivity of the land influences maybe where we're at on a scale of 1 to 10, so to speak, and are we selling more productive land or less productive land, and then what is it selling for on a per acre basis. 2019 results at a glance here. So this is from the actual data that Bruce crunches, and you saw that maybe a little bit earlier, where the actual numbers that came into him, which is all he has to work with when we give it to him, is a negative 2.6% excellent ground, good up just under 1%, average down 1%, recreational up 6%. And that is reflective of what we saw from the actual data. That good range can also have a wide range. It's kind of our widest range in productivity also. You can have at the lower end of that range some really more marginal soils that may not sell quite as well, but then at the higher range, the range, soils that actually act like excellent soils, as long as you get just a little bit of rain. And so that range can be kind of a value buy sometimes when people are looking to purchase land, and that might be why there's a little bit of strength there too. Average tract size last year was smaller than a year ago, but not by much. Average price was slightly higher than last year as we went across all classes. Here's how we compare them out as we look at the different land classes in each region, which one is doing better than others. Regions 2 and 5, the excellent ground seems to be doing the highest return. The other ones, you see a lot of good and fair quality. Now you get to Southern Illinois, that's all you got really to work with, and regions 8, 9, and 10. But sometimes we see institutional money often investing in that second tier quality of land. And part of that reason can be because they see a little bit higher continuously compound annual growth rate. And that's what they're attempting to do for their investors. And so as a result, hey, we need those folks in the marketplace. Not everybody can buy the best ground. And so the fact that those folks are willing to look at the overall returns and say, that's what my goal is. So that's what I'm looking to seek. And sometimes that's where the best returns are at. David Oppendahl with the Chicago Federal Reserve puts this out every year, and I like to reflect on it as you look across the I-states and the differences in the different areas. Regionally, inflation adjusted was flat, but Illinois was down 1%. You can see up in Wisconsin how maybe theirs is a little more struggle and probably a little more of the ramifications of the dairy industry. Over time, you can see we still have had some minor percent, 1 or 2% lowers the last few years, but it's nothing like we saw in the 80s. And we don't have that deep dive going on. We'll talk about that a little bit later, maybe why some of those other things are why that's that way. The inflation adjusted charts, continues to show it flat as well. This is all from the Federal Reserve, and we thank them for putting this out because it does give us another source to look at for opinions. This is of ag lenders and the folks associated with the Federal Reserve. Observations from our committees, just real quick. You can see all this in the report as well, but basically, and Bruce had a chart that showed the counties with the most prevent plant, and that was a big part of the issue that we saw in regions 1 and 2. Actually, region 1, they're excellent quality soils, and it was really everything. I mean, it was a hard sell to sell farmland up in that area this fall. I know our office in Bourbonnais, finding two buyers may be difficult. You need to find one to get it sold in a lot of cases. And so we don't have a lot of auction data, et cetera, up in that area because of that. And there's a lot of farmers retiring after 2019. It just isn't fun anymore. And so you're going to see some things happening with regard to that may impact rents and things of that nature down the road. Higher median prices are steady sales in region 2. The highest prices being the northern 3 counties, lowest in the southern 3, but they expect stable to slightly lower prices in 2020. Region 3, you'll notice John Leeser talks about the crop insurance. We'll talk about that later as well, but he always does a unique perspective because of his role in the world of not only buying and selling real estate for folks, but also being a crop insurance agent. He looks at that part of it. Region 4, we had rents steady for 2020. There is additional new wind projects going on in northeastern McLean County, 2 more proposed in McLean and 1 in northeastern Livingston. So we will be watching those. A few auction sales, but the good category had more auctions and noted higher prices of good quality land in region 4 during 2019. The sales volume in region 5 was higher, and as a result, they thought they saw some lower values as we move forward into 2020. They've got a new wind project in Douglas County that's also dealing with things as we go forward. Region 6, the center of the state, stronger prices at auctions and active institutional investors were present throughout the year. Strong cash rents for 2020 once again. Section 7, Region 7, the wind and solar projects are beginning in that area as well. And some of our members over there noted that those are happening in that area. And that's going to be adding some income stream to farmland in Region 7 that they had not had previously. Recreational land is steadied up 5%. They felt in that area as well. Most delayed planting fields were switched to soybeans in Region 8. As you got into Southern Illinois, there was some significant prevent plant. Interestingly, they felt like those were soybean fields, switched to soybeans and not corn, which as you get in Northern Illinois, I think we all noted that those acres became intended as cornfields to a certain extent. Southern Illinois, they still planted some of them to soybeans. So rather than maybe not planting them, they went ahead and planted them to soybeans. So that was noted. The positive influence from the Metro East area of St. Louis is evident in that area, especially in the highest quality land classes. Recreational sales were fewer and thought to be 3% higher. Southern Illinois, the regions 9 and 10, you can read about those a little bit more, but the volume of sales was steady. More acres were transacted in 2019, and the prices were higher to better soils and lower on poor quality soils. Some rents have been impressively high, they noted, on new rents. Gary, I'll turn it over to you. Talk about the survey.
Yeah, so if you're looking at the land values booklet, this information is towards the back. We have the up front in the land values booklet, a summary of the entire effort. Then regions 1 through 10 are listed, and data that Bruce and summarizes from the data groups is there. Then we have these land and lease surveys at the back. And again, these are of Illinois Society and RLI membership, and we asked them generally opinions about moving, what things look like moving forward. And again, largely consistent with what we saw forward. The survey says price and returns stable in 2019. Again, thanks to MFP payments. There was a sentiment towards lower prices and lower land classes and stable value and higher quality soils. Our lease survey, cash rents are projected to remain steady for 2020. And again, most of those rents are set already, and our rents and net returns were really supported by 2019 MFP payments. Here we are looking at incomes from alternative lease types. This slide compares 2019 to 2018 for the 4 land productivity classes that we use: excellent, good, fair, or excellent, good, average, and fair. 2019 versus 2018. And again, this is shown for traditional crop share, 50-50 in northern and central Illinois, and more varied in southern Illinois, cash rents, and then custom farming. Overall, if you're comparing 2018 to 2019, remarkable stability, actually, but overall, you would say that there was some decline in the traditional crop shares, a bit of decline in the crop shares, slightly higher in cash rents, and then custom farming came down. Again, given the year that we did have, and again, lower yields, late planting, lower overall prices, probably roughly consistent between 2018 and 2019, but lower yields. Those MFP payments were very helpful in keeping our incomes up, and again, not much difference across the land productivity classes as far as returns, perhaps down a bit, and particularly in the crop share or custom farming, where we do share those returns between farmers and landowners. Last year, we asked what would happen to 2020 farm leases given, and we asked this specifically, and it turned out to be pretty close, $850. So most of our membership said that if we had an $850 soybean price, we would see a decrease in cash rents.
We didn't count on MFP payments.
We did not count on MFP payments. Here's what actually did happen. Cash rents, actually, we may have counted on what the administration said at the time we were doing the survey. Yeah. So here's what did actually happen. Cash rents for excellent productivity land, 303 up to 305. Good, 263 to 270. average 215 to 224, 169 to 173. Overall, it's just a stability and maybe even a tad increase in those cash rents. Again, given who we are asking, professional farm managers, we're going to get those professional farm managers' views on, or, the professionally managed land. Overall, again, if you're looking at particularly since 2017, 2018, 2019, and 2020, flat over particularly the excellent, good quality lands, and average flat, and probably even flat over the fair productivity lands. And again, all of those have fallen since 2013. If anything, we've seen professional farm managers react more to the fall in prices since 2013, probably because they reacted more quickly to the higher returns that occurred from 2006 to 2012. But again, reasonably flat since 2019 and 2020. Here, and again, Bruce and Dave have mentioned a lot of times the farmland market, and we all know there's not a one price market here, and that extends to cash rents as well. Here you see the mid category is what would be average for professional farm managers, and there's the high cash rents, high 1/3 and low 1/3. And again, you can see there's a range. The green lines are for excellent quality land. 324 high 1/3 of those excellent productivity lands compared to 305. So a lot of upward rents there as well as some downward rents, 267. Again, when we put out these averages, you have to keep in mind that the underlying variability in cash rents that are out there, and this slide illustrates that. Those cash rent variability may have come down a bit from 2013, but it's still fairly wide. And here you can see that illustrated again.
Yeah, and that's reflective a little bit of landowner goals and objectives and things of that nature that we have out there as well.
Yep.
So we have to react to those as our landowners are prefer.
Yep.
So
Landowner objectives, and then there are all sorts of plot plan characteristics that can't be captured by productivity. We ask what has happened to the volume of farmland sold, and made a comparison to the last half to 2019 compared to 2018. At that point in time, no change was the modal response. We had quite a few people who introduced some increase, some decrease, and then there was some that indicated substantial decrease, but overall, pretty steady, maybe a slight downward bias in there, but there isn't a lot of change in volume of farmland sold from one year to next. Again, that likely represents the reasons for selling farmland, which are settling estate sales, and maybe COVID will speed that up this year, but hopefully not.
I don't know. We'll see.
Yeah, we'll see. Buyers and sellers remain remarkably, as you would expect, remarkably stable from 2019 to 2018. As they have for the last several years, the bigger trend, I suppose, over time has been the retreat a bit of institutional investors, and the retreat of the institutional investors. Local farmers and local investors, 59 and 19%, so almost 80% of the land is being bought by local individuals. So, and then non-local investors, 10%, 6% recreational interest, and institution, 5%. Continuing to see those institutions hang in there. Estate sales were the main sellers, 52%, retiring farmers, 14%, individual investors, 14%, active farmers, 9%, and institutions, 9%. If anything, we saw an increase in individual investors and estates down. Again, the reason for selling farmland, settling estates is the major reason. 58% use the money for other purposes, 26%. Pay down debt, 11%. So Most of those, if we ask this every year, have been pretty stable throughout time. Again, we looked at we might have thought 2019 was sort of a stressful year, but in the end, it really probably wasn't.
Right.
MFPs probably
alleviated a lot of the pain. Yeah. Yep. And I think as we look at that going forward, there could be more stress on some farmer-owned land that may need to have some sales and leasebacks, but most of those are able to be picked up right now because there are buyers in the marketplace.
Yep. And again, we have the COVID response, but in the farmland market, we got time here.
Right.
And then let's just see where all of this
plays out.
Yeah. Methods of sale: private treaty 51%, public auction 33%. I'd like to see what a public auction does this afternoon, right?
Well, we may see how that all transpires. Yeah.
Yeah. So, and sealed bid, multi-parcel auction. And Dave, I think over time we would say private treaty price increased a bit.
A little bit in this market, but what public auction certainly has its place. And I had one, well, we'll talk about that later. Yeah. But yeah, public auction certainly has its place. And in certain areas, is kind of the way people expect it to be sold. And so if you try to list a farm in a certain area, they're like, we don't know what it's worth. And they expect you to auction it. And that way everybody can come and bid and they can find out what it really is worth.
Yep. Yep.
And in other areas, they don't like auctions. And so you just need to list it and negotiate with somebody and try to get something done.
Yeah, I would also point out that in those articles in the back, we did ask some questions about some other things that we're not going to spend a lot of time on. We actually have more of our farms are you going to mention this a little bit?
Go ahead. Yeah.
Or we have more of our land organic than maybe we thought?
Yeah. Well, I'll just hit on those numbers when we get to it in the slide later on here a little bit.
Yeah. So be sure to look.
More of a talking point.
Yeah, be sure to look at those articles because there are more talking points than we have gone over today. So that's a reason to buy the book.
There you go. Go get the book. So
Dave's going to give us the lowdown.
Yeah. So I had a preacher tell me once, there is a sermon he asked that it's the so what. So what are you telling me here? So that's what we're going to try to get to right now. And Dr. Sherrick hit on a lot of this already, but here's trying to boil this down into just a few talking points. What's going to impact as we go forward. Obviously, farm incomes, supplies, how many acres are we going to put into production? South America, we even talked about, was it yesterday? I think maybe they're a little bit less than what they thought they were going to have. North America, will we get everything planted again? What will we plant? And those types of things. The global demand side, obviously the slowdown is inevitable with everything that's coming on. And the potential for a recession is likely, but people still got to eat, and farmland's a big part of that as we go through this whole social distancing period of time. Election years are always unique. One of the things that has been brought up that I've seen, and maybe some of you have seen as well, is one of the correlations to an incumbent getting reelected is how the economy is doing. And so this is a different politician in the presidency than what we are used to. So as far as politicians go, and so it may be a little different, but from a standpoint of those are some things that you're going to see. I think everybody in government that wants to get reelected trying to do what they can right now to help everyone out and move this thing forward. That's the right thing to do, and we seem to be seeing that out of Washington, D.C. Now, when it comes to other countries, trade agreements, are they going to be kept? Is China going to keep their word? Are they going to buy this stuff or not? And okay, when? And will it come later in the year or will it come at all? And so that's a question that I think that everybody's got out there. The ethanol issue, just read Dr. Irwin's stuff on the Farm Doc. I'll just refer to that right now. But that's a question mark for all of us, as well as we talk about electric cars and things of that nature, what the future of the ethanol industry is. And then the farm program, no promised MFP. Obviously last year we got it because the economy was good. There was money to give to us. There's a lot of other people hurting right now too, and that may not be as popular of a thing for us to get. And then lower crop insurance values. There's a lower safety net than there was a year ago from a starting point. And so those are some things that we have to consider. Interest rates being down typically help farmland values. Those lower interest rates and lower payments on any farm mortgages get converted into a higher value for the land itself. So that's for that payment for somebody buying a farm. Lower interest rates typically influence it on for different reasons, and one of them is the alternative investment. Is the fact that if I can only get less than 1% on my prime money market rate, should I go out and buy a farm and earn 2.5% instead? And that, amongst other things, including the volatility of that phenomenal chart that Dr. Sherrick puts together on the volatility index, that just blows my mind every time I see it, and it's going to do it again. Farmland is relatively stable in comparison to the ups and downs that you have through other investment alternatives. One of the things we talked about on our date a year ago, because it happened that day, was the inversion of the yield curve. Dr. Sherrick talked about that earlier, but that happened really a year ago at our conference for the first time since 2007. Why is that significant? Because the last 9 recessions in the U.S. were all preceded by an inverted yield curve. Now, did we expect coronavirus to be the reason why? No, but the fact that it happened and the average lead time is 14 months. Well, when is 14 months? May 2020. So these two, the previous slide and this one were from last summer that I put together for the Farm Bureau Outlook in August. But I thought it was still true that we didn't see this coming necessarily, but it looks like it's probably going to happen. I know there's an average of about 8 banks that put together their numbers yesterday, and they certainly expect to see some negative GDP growth, although slight in the first quarter, but then second quarter somewhat significant, and then hopefully in the third quarter be back to positive. And so those types of things are things that have to be considered. The 10-year Treasury yield, Dr. Sherrick spoke on that, so I'll stay away from that. But obviously the deep dive we had on the 1 month to 0.54 and then back up now to, I think it's 1.16 or 7 this morning, or as of last night, makes me feel a little bit better that at least it's popped back up and not went completely lower. One of the things about our currency relative to other currencies, though, is the strength of the dollar that impacts our exports that we talked about. And part of the reason I pulled this slide back to 86 is because at the height of the ag crisis, our dollar was so strong, it was hard to export anything. And we're by no means there today, even though we're still high. And places like Brazil and Argentina reacted to our lowering the Fed discount rate on Sunday by lowering theirs further, which then made the Brazilian corn and soybeans even cheaper to the Chinese. So that way they can still say, well, the market is telling us to buy it from them, not the United States. So those are all issues that can impact us as well as we go forward. We do believe there was some rebalancing of assets from some folks that we've talked to that led to some movement of money out in the first quarter before everything happened. Then obviously this coronavirus issue has investors rattled. That can lead to looking for places that are more stable. And so as a result, will that cash sitting on the sidelines now go into the stock market again, or will it be redirected to a hard asset like farmland? Last year, our number one concern was increasing interest rates. Not necessarily the issue anymore. And not funny thing, but our membership actually kind of saw when we took this thing in mid-February, we asked the question and they're like, oh man, slowing demand out of China, et cetera, could be a real issue when it comes to economic growth and our ability to be a part of it. So they're right. I mean, that is probably the right thing to be worried about. So farmers are burning through some cash, just like everybody else is right now, to keep things prosperous. That cash gets directed into debt service, aggressive cash rents, and land purchases in that order. And typically land's the third thing that they buy. So as a result, that could hamper some demand issues. And there are some farmers that need to reduce some long-term debt through some sale leasebacks and things of that nature. But like I said earlier, I do believe that we are seeing people stepping in willing to buy this land for obvious reasons as a hard asset and continue their investment expansion in those areas. And that's being taken care of right now. So farmers are able to do that. Some older, well-capitalized farmers are retiring. And so that will be something that may be an impact on some of these rental rates too, Gary, that I think we certainly saw in our farms where we had guys retire. And in some cases, we put things out to bid and the leases were actually a little stronger than they were before. And that's probably getting reflected in our survey results, I think, a little bit too, besides the MFP. So keep that in mind as we go forward. Net farm income, it is what it earns. And that's what we're going to have to be able to be faced with in 2020. Should you be looking at other opportunities for your land besides just the commodity corn and soybeans? And so we asked our questions of our membership, what are you seeing different that's out there? So we asked about solar again. We asked a year ago. This year we asked a little bit differently. 16% indicated that it wasn't just signing an option, but they've actually got something physically moving forward from the option phase into the building phase. So we think you're going to start to see a little more of this in Illinois. I've certainly seen more of it in other states. It hasn't been always as fast to move here on this prime Illinois soil, but we think we're going to see it. And just like Kevin mentioned around energy locations, well, it may be around substations that have excess capacity. That's where you're going to see inquiries to people that own that land, where some of these companies are going to come and say, can we put up a big enough project to fill that line space when there's excess space? And that includes around all the wind projects that are going on. So in the summer, when wind speeds are low, they can offset it with solar, which you've got sunny days and can fill those lines with the solar energy as well. So we think some of that is starting to take hold and could be another part of it. 41% indicate they manage farms that are transitioning into organic or already organic. We think that's going to be something in the identity preserve chain, just like Dr. Sherrick said, that could be a little more than just a small trend. Guys trying to figure out a way to improve margins. None of the farm managers indicated they had any industrial hemp, or they wouldn't admit to it. So that was an interesting for all the talk that it had. Back to what we talked about though. $10,500 land with $324 rent. Take away your taxes and liability insurance and your soil tests and repairs, end up at $261, and that's about a 2.5% cap rate on our farmland still. And even though that's lower than it was years ago, it's still comparatively, as Dr. Sherrick said, may be something that people want to look at. What will we expect to happen? Farmland prices for 2020. Talked about that as well earlier. Here's what we're seeing though in the first quarter. And I think this is what Dr. Sherrick alluded to. He wanted to kind of me to hit on. We're seeing still really strong Class A farmland sales at auction. These are all auction results in Western Illinois, and Central Illinois is actually a little stronger than a year ago. I prepare this chart every year, look at the numbers, and these are actually a little higher numbers than we had as examples in a year ago. The eastern side of the state just has not been as strong, and we don't really know why. Part of it could be production wasn't maybe quite as good in the fall. Part of it is because there's just not as much for sale. A couple different sealed bid sales took place rather than going to complete auction by some folks here in Champaign County. And so, and then today we've got, like I said, one big land auction, 874 acres. We'll find out what's going on there. And it starts at 1 o'clock. And so that's where I'll be going probably after this. So the bottom line is we're moving forward with some stronger sales, high quality land, equals stability and land values and liquidity. That's the other thing. The best ground sells the quickest and easiest, fastest. If you need to convert something to cash, high quality land typically gives you the best ability to do it quickly. Field shape, percentage tillable, drainage issues, those are all things that are detractors that you could work on to improve somewhat. And if you can, that helps the attractiveness for the sale of the land. You can't always move the location, but you can improve how it is as far as the better looking house on the block, so to speak. Buyers, now's time for opportunities. Timing might be important for some sellers that want to sell yet before spring planting, and you might be able to look for those. We talked about earlier what could boost values higher and as well as lower. So I'm going to kind of skip through those. We're running out of time. It's 12:02. I want to thank everyone for participating today. I don't know if we've got any questions that we want to take, but at this point, that concludes the final portion of our presentation.
There is one question. Then do MFP payments get consideration in cash rents? And the answer is yes. And I would say that in the cash rent process itself, it's not a direct thing, but the fact that we had $80 of cash rent in Central Illinois and $60 over the
It certainly helped keep them stable
Yep.
for this year. I can tell you that was we went through our rent negotiation period with a lot of our tenants.
Yep.
Everybody kind of like, we thanks to MFP, we'll sign it again next year. So
yeah.
I don't know if there's anything else. If not, I'll just wrap her up. If that's
All
okay.
right.
So as we conclude, I'd like to share something with you. And I hope that you've found this time to be worthwhile and believe as I do that farmland provides one of the most solid and stable assets in uncertain times. The tangible asset is made for times like this, and the next few months will give us challenges to overcome, and we will be made better for it in the end. Those of us who have grown up in production livestock know the disciplines that we have to not spread communicable diseases, and this is no different. So hunker down and stay safe, and we'll look forward to seeing you on the other side of this brief, inconvenient period of history. That's what I got.
Thank you.